It's been a pleasant change that the conversations we've been having with clients in the past week or so have been a little more positive as the value of most people's investments are mostly back where they were about a year ago. Yes, things are starting to get better. Um, that's not to say we're in the clear and it's plain sailing from here on, nor that those things will continue to be as depressing and rocky as they have been. Sorry, that was a bit of a politician's non-answer to the question that most people are asking us, which is, when will I be able to see better returns from my investments than I'm getting in the bank? And of course, I don't have a crystal ball, blah, 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 but I do have the not always so great advantage of having done this job for a long time. And so having really and truly seen it all before. Now, all crashes, stock market falls, bear markets, or as fund managers now seem to call them, drawdowns in stocks and shares, are unique. Their circumstances are always different, and they can always be described as unprecedented, which in their own time they are. But the patterns are all pretty similar. And I think the best comparison this time is what happened in 2000, when you may remember that what was then called the dot-com bubble burst. Now, share prices all around the world, but particularly here and in America, have been driven up by a frenzy of investments in all sorts of internet and tech companies, all of which, like the internet itself, were the next big thing. Except most of those companies weren't the next big thing, and around budget time, after the dust of all those big millennium parties had settled, stock markets took a big tumble. They started to recover a year or so later. Then 9/11 happened. Then, a couple of years later, we invaded Iraq. But then things got better relatively quickly. And yes, if you'd hung on in there, you'd still have come out with a profit. Now, this time we've had COVID, a COVID recovery, then Ukraine, that's 3 years or so past already. And now inflation is up, interest rates are up, returns from investments will rise to meet them. When they do, it may well happen, as it often does, surprisingly quickly. So, to coin a not very good phrase, you really do have to be in it to win it.